Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. And I'm recording this on Thursday morning, April 14th, as our offices and the market will be closed for Good Friday. I hope you guys all have a nice, regenerative long weekend. We'll be back at it again on Monday. As for the market, it's sort of continued with its 2+ week decline this week for the most part, especially on Monday, when the big decline kind of threw the nascent intermediate term green light overboard. So you can call the intermediate term trend neutral, you can call it slightly down. But what I would just say is it's not up. And when you combine that with most stocks and sectors and indexes still below their 200-day lines, we just kind of think you should still remain mostly cautious. And a lot of cash, small positions, that sort of thing. And Cabot Growth Investors model portfolio, we're a little over half in cash now. I'm not craving more cash, and I actually do have a few optimistic things to say here when we jump into the charts. But we're trying to give things a chance here. But if need be, if this really turns into a huge leg down, obviously we'll raise some more cash. Beyond the indexes, though, and beyond the moving averages and all that, my biggest rub here when I was thinking about it, really going back months, at least with growth stocks, is very, very few stocks have really been hitting or reaching, multi-month highs or all-time highs and holding ground, really breaking out and holding those ground. It really hasn't happened since the growth stock top in mid-November, including during this latest rally. There's been a couple exceptions, and I do see a couple more things sort of seems like the selling pressure is waning a little bit. But for the most part, if a stock runs up and hits some sort of, resistance, within a week or two, it's really hitting an air pocket and falling down, which basically just means there's still supply coming to the market with some big investors. And, you're not going to get any sustained trends until that changes. Maybe that changes next week. It can change in a hurry. But until it does, it's just going to be more of at best, sort of a trading market with the growth side of things. Commodity stocks do look better, although there it's thinning out a little bit too. And some of the buying pressures seem to be easing for better or worse. We'll see if that, represents new setups. I'll talk about that in a minute. But for the most part, even with commodity stocks, we'd be favoring, buying the dip towards support, setting a relatively tight stop, and then seeing how it goes. Okay, chasing things higher hasn't worked. So overall, cautious, patient. It's not the most exciting thing, but the good news is we've really had this wipeout here in growth stocks at least. So when we do come out of this, and we will, I do think there's going to be real big money to be made. But for now, for the most part, it's being cautious and patient and waiting for that to happen. Okay, let's hop into the charts and the indexes and a little bit more optimism. I am using MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So here's the line pen. So first, let's just look at the indexes. This is the NASDAQ. Again, I'm recording this. It's 10:30 on Friday morning. And you can just see, we've been living below these moving averages for months, really many weeks. We did kind of get this nascent intermediate term green light. So you put some money to work, but then you can just see it's really fallen off. It doesn't mean, we're necessarily going down here. I wouldn't, say that. What I would say, though, is that this type of decline is not something you'd see if this was sort of this kickoff and we're, what you'd expect to see is sort of almost a lockout rally where people can't get in and they're doubting it. To retrace so much, that just tells you that we're kind of back in the soup for now. I wouldn't say, I know some people are talking about, inverse head and shoulders. I don't know if you're a pattern person. So to me, I would just say at this point, optimistically, you can just say we're kind of still in this bottom building process. We'll see how it goes. Right now, we're below these moving averages. I don't mean to make this chart too messy, but we're just below the moving averages in the NASDAQ and in a couple other indexes. If you look at the IWM, same sort of thing. Not too far below. Like I said, if you want to say the trend is more neutral here for the past couple months, I'm okay with that. But it's not up. It's not something where you're like, oh, these institutions are putting money to work and really piling in, okay? MDY, same sort of thing. Everything's within, a couple percent above or below these 25 and 50-day moving averages. S&P 500, just to run through some, same thing here. You can see just kind of sitting literally right on the 50-day line as of this morning, which is, another sell-off after yesterday's update. I would say this, and I mentioned this on yesterday's Prime call, so I just want to say it. We're 55% in cash, so this isn't calling any sort of bottom. But since this was January 24th or something, since this January low, we've had the Fed raise rates. We've had the Fed jawbone for, probably many 50 basis point rate hikes, talk about shrinking the balance sheet in a hurry. We've had war in Europe and sanctions and shortages and spiking commodity prices. We've had an inverted yield curve and economic expectations, go through the floor. And we've had interest rates in the market go up. I think the 10-year note's up 110 or 115 basis points since early March. And we've had, I think mortgage rates just hit 5%. I saw today. Somebody slacked me. So we've had all this stuff happen. And when you look at, this is the S&P 500, we haven't gone anywhere. We've kind of hung in there. Now, could we come in next week and boom, we're down 6% on the week? Sure. I mean, it's definitely possible. Like I said, we're kind of defensive. But even when you look at, the IWM, for instance, here's your January lows in here, no real progress. When you look at the NASDAQ, here's your January low, kind of flat, okay? Now, the January low is pretty low, so I'm not trying to make it sound like we're super strong. But the fact that the market has been absorbing this bad news, I guess I would say, it's been absorbing all this bad news, all these worries without really going down. And when you look under the surface, like, number of new lows or bullish percent, whatever your favorite breadth of measurement is, they've been kind of gradually improving over time. All I'm saying is just keep your, maybe it's the long weekend, you're in a good mood. The weather's getting better here in Massachusetts, but really, you just want to keep your eyes open and your head up. It doesn't mean you're going to go buy or anticipate a bottom, but I still think there's a chance that this could be sort of just a bottoming process that could go on a little longer and could cause more pain, but could be a bottoming process where maybe in a few months we look back and say, hey, this is kind of this was sort of a low area for the market. Maybe I'm wrong, but I think it's worth keeping that in mind given the lack of net downside in a lot of these indexes and some of the, like I said, the number of new lows and breadth measurements slowly improving. We'll see how it goes. Okay. Back to the here and now. One of the indexes I'm keying on, this is the chip stocks, and they look bad. So, I mean, not to just totally flip side here, but chip stocks here. And now you can see these are below their January low, retesting the March low. And just again, this sort of rally just completely disintegrated, much more than the major indexes. And frankly, a lot of growth stocks look better. But chip stocks really have been pretty weak. I don't necessarily need to see the chip stocks be the leading group, but in a Wealth Daily this week I wrote, they're kind of like the new transports in a sense, like from decades ago, because chips go into everything, whether it's computers or autos or windmills or, whatever, right? Data centers, software programs. It goes into everything. It's needed for everything. And so like if all these stocks are really getting hit, there's a decent chance that there's some reverberations there. So let's just see if this can kind of bottom out here or shake out and rally. But you don't want to see the chip stocks just keep going down. I would say that's bad. And same thing on the flip side. I keep talking about this. Here's XLP, another new high today. Same thing. They're buying defense. XLU, even with higher interest rates, they're buying defense. Down a little bit this week, but clearly a nice uptrend in utility stocks. At some point, this relationship will change. I don't know if it's going to be next week or in 3 months or whatever. But when it does, I do think it will be a, relatively early sign, maybe a confirming sign, hopefully, that the market is on a different footing, meaning not just that the market went up for 3 or 4 days, but you're starting to see maybe some of these pull in and stay down while some of these growth stocks try to break out and things like that. So that's something to keep in mind. I'll also just mention sort of on the, I guess I'd say economically sensitive side, you did have this dip below support in transports. If you want to be very optimistic and say, well, that's going to be a big shakeout and we come back. But at this point, I can't say that. This looks pretty, even on a longer term basis. This is kind of a confined chart here, but take my word for it. We're kind of breaking here to, I don't even know, definitely 52-week lows, I think, on the transports. A little bit of a bounce this week, which is better than not, but you're going to need to see more than that. And the financials too, which you'd expect to be strong with higher rates. But my point with showing these two charts is there's some, the economic recession trade or whatever you want to call it is out there with the defensive stocks, with obviously chips down and even some of these cyclicals down, including financials. Okay. So just in terms of relationships, I'm not a big intermarket analysis guy, but if toilet paper is doing well and chip stocks are not doing well, probably not the time to be super aggressive, at least in growth stocks. Okay. Now, in terms of individual names, we'll start with some commodity things. One thing I noticed here, just going through charts, and this can be, I'm going to sort of bring this up and not give you a conclusion. So I hope you enjoy that. This is Pioneer Resource. I've noticed we've seen some tightness here in the weekly charts on some of these oil names. The big breakout here was at the beginning of the year. So it's not late stage, but it has been running now for 3.5 months. And we're tightening up. And the volume is really dried up. Obviously, it's a short week this week, but really you can see the last 3 weeks here, volume's really dried up. Is this sort of the stock is running out of steam? It's losing upside momentum and it's ready for a correction? Or is this a tight pattern, which is often sort of a pause that refreshes? It tells you it's under accumulation and it's going to get going higher. We'll see what it is. We own an oil stock. We're holding. We're just trend following it at this point. It looks fine. But I have noticed these, and if you want to take sort of a decent risk reward entry in some of these, let's see what happens next week. If they kind of break out from these little ranges, you could set a relatively tight stop if that's your thing and see how it goes. Oasis is another. There's a bunch of them that look similar, but this is a smaller one, OAS. You can kind of see it's kind of still has this sort of almost like an ascending base, but sawtooth action, but just kind of tightening up in here, a lot of tight weeks. Volume here didn't dry up as much, but it has this week. So again, see if this thing can pop out of there. One other name in the oil space that I've just noticed because it's not waiting around. This is PDC Energy. Now they're in the middle of an acquisition. Actually, Oasis is too. But just notice how a lot of oil stocks are doing okay, but they're kind of been doing this a little bit lately, which looks fine. This one's really been sort of attacking higher. You can see thrusting higher, pullbacks to 70, almost makes it to 80. Maybe it pulls back again. But anyway, that's just one I'm sort of mentally flagging. Again, I'm still favoring pullbacks in a lot of these names, except when you get those tight areas. But PDC is one to watch. Oil service, Baker Hughes. This was in top 10 a couple weeks ago. Just a nice setup. I just noticed here. I mean, you have this again. These things just broke out a few weeks ago, really on Russia. This does have earnings next week, so April 20th. We'll see what happens. But very tight week in here. I know, holiday week, but just a nice controlled consolidation in here. And it's not really correcting in terms of price, meaning it's like, big pullback to the 50-day moving average. It's more just correcting in time, which is usually a good thing early on. So that's a pretty nice setup. I wanted to mention AMR. I think I mentioned this last week. This is kind of a flaggy sort of thing. It's extended. It's had a huge run, so buyer beware. But sometimes these things, big volume on the breakout, sometimes these things can really run. So if you want to kind of roll the dice, AMR does look good. That was in top 10. I've mentioned MP Materials. This is rare earths. And what I liked about this is, here we go. We got this breakout on pretty good volume, ran up to, it's a very volatile stock. So it went from 50 to 60, which, believe it or not, isn't even that big of a move. And now it's kind of pulled back into this support area. Could it melt down? It could. But, it's kind of pulling back into this zone, not that far from the 50-day line. Looks like a decent setup. How you want to play it, I'll leave it up to you. Wait for a bounce, whatever. But doesn't look too bad from a setup point of view. And same thing with Alcoa. Again, Alcoa's had a big, if you look at the weekly chart, this is AA. It's had a huge, it's been running for a long time here. Now earnings are huge and you'll find all the reasons why it should keep going up. $10 a share even next year. So very cheap and blah, blah, blah. But you got to be wary of a stock that, was at 43 and now and then hit 100 a few months later. But it has pulled back here to the 50-day line. It's starting to bounce. Again, you're not really seeing much volume here. So let's see. It's kind of a little bit of a pattern among some of these stocks. But let's see if that's meaningful. Just risk reward wise, kind of like MP, whether it's here, higher, lower, whatever, but you're kind of in this area of support. So if you wanted to take, a swing at it, that's, I think something around here could be worthwhile. And if you get hurt, hopefully it's more of a paper cut than a whack across the head. Okay. In terms of other names outside the commodity area, this is Halozyme. I'm warming up to this. I always love the story. And you just had this long, just very tedious decline. Interestingly, though, easy for me to say, the stock bottomed back in December, and that's when the relative performance line bottomed. And now it's kind of ratcheting higher. Obviously, there's more medical stocks that look pretty good, back above the 200-day line. There is overhead to deal with, and they did make an acquisition this week, which, supposedly is accretive, but, maybe that could hesitate the stock a little bit. But so far, it certainly looks okay to me. It's just one on my watch list. I can't really say. I'd almost rather see it go up and then pull back a little bit and the market's healthy, but, market doesn't care what I think. So we'll see how it goes. But HALO is one that's on my watch list. Cybersecurity is one of the growth areas that's been blessed so far. Whether they're the next ones to get hit, we'll see. Palo Alto Networks, I've mentioned a bunch. Higher lows, spikes to new highs, higher low on that pullback. whatever, 10 days up in a row or something, and then really just holding well. Actually, I think it hit a new closing high yesterday. So far, so good on PANW. And Crowdstrike, I mentioned this back. I mean, I wish I bought it back here, but I mentioned it back here after earnings because you kind of had these, you were starting to see some of these stocks that were down. This was down 50% in, 10 weeks or something. But you started to see some, okay, there's a little support, and then it kind of retests the low. Well, there's another piece of support. And then you got this huge volume on the upside on earnings. Didn't mean it was going to go ratcheting higher, but it has. And now it's kind of cleared. See, this was an interesting thing. So here's some, not to be too inside baseball, here was some resistance. And I wouldn't say it's totally free and clear, but the 200-day line, prior resistance, what happens? It kind of hits it and it starts to pull back with the market. And it's like, oh, this is kind of ugly. But then it stopped. It just stopped going down, hit the 25-day line. And this week, it's actually had, and there was an upgrade by Goldman, I think. But this week, it's kind of reached up into higher highs. It's not the most decisive thing of all time, but given what we've been dealing with growth stocks, this is actually kind of noticeable, especially when you get sort of the volume signature too. We'll see what happens. There's overhead and all this, but I'm just sort of noting it because it's also in Palo Alto's group, and maybe you're getting a little bit of a, theme or a little bit. It's not, at least it's not a Lone Ranger sort of thing. There's a couple of names in the group working, so just wanted to mention that. Box, this is one that's been, it's been actually acting pretty well for a while, but not doing much. So you can kind of see relative to the market, it's been just dead as a doornail here for a while. But starting last, November, really the market peak, it started outperforming the market mainly by not going down. And now you're actually seeing it sort of push higher on the chart. And this is sort of a cloud storage sort of play. And you can see some nice volume accumulation here. Shaking out with the market, but nothing too damaging. And then this week, a few days in a row of good volume. It's a little thin, not technically thin, but it's on the thinner side. But just mention it, BOX, kind of an interesting chart, trying to accelerate to the upside. Let's look at the monthly chart. Yeah, it might be coming out of the sort of this longer term range if that's your thing. It's not really my thing, but just mentioning it. Airbnb, and I'll mention one after this too, and then some of the hotels. We'll see. I don't know. But some of these stocks, you're like, I've just seen so many of these IPOs come public. They're overhyped. The market's not ready. Then the market gets hit and the stock has an issue or the pandemic or whatever. And eventually the stock, after a year or two, blasts off and ends up being a big leader. I wouldn't put that past Airbnb to do that. I don't know if that's going to happen or when. But what I do like is this, it's kind of a double bottom base if you're into that sort of thing. And I'm just sort of looking at this recent action where, again, you kind of get this thrust and then the pullback. It's kind of ugly, but it's really not doing anything wrong. And then yesterday it's like, there's a little buying there. And that was kind of part of a group move. It has work to do. There's all sorts of resistance up here, but just kind of on my back burner watch list, I guess I'd say. And sort of in that same theme, again, with these themes, this is Hilton. There's been some of these stocks that, like LPL Financial I mentioned last week was like this, this is HLT, by the way. Clearly a kind of a recovery play. It's not a great growth stock or anything, but, try to get going here. Looks good. Oh, breakout. Nope, that didn't work. Oh, try to get going here. Nope, that didn't work. And then kind of popped up here on the daily chart. You can just see it's been up and down. I mean, just look at the chart. But again, it kind of pulled back here and you're like, all right, this is going right back to its lows. But instead, it remains well above these lows. And now it's popping higher. It's actually hitting, 2-month highs here. Buyable, best picture ever? No, not necessarily, but just something I'm noting. And Marriott, same sort of thing, which you'd expect, MAR. But again, kind of this nice volume clue yesterday, and then a little bit higher today. Maybe it gives it up next week, but it's interesting. It just seems like it keeps chipping away at the potential sellers, meaning they're exhausting their ammunition. And here we are 6 months later, and the stock's still sitting near new highs. So what happens if the market actually gets going or the group really gets in favor? So just something I'm sort of flagging there. And then in terms of, because I get some questions on these, so I just want to bring up these charts. This isn't something I do, but these are sort of bottom fishing ideas. This is square or block. I think I mentioned this before in terms of just drawing a line in the sand, and then you had a big rally here with the market, 3-4 weeks ago, and now it's pulled back. So some of these I'm just sort of seeing to see, does this just melt down and it's sort of just a whole new leg down for the former leaders? Possible. So far, though, it's sort of pulled back. You've had this big buying volume. You've had this big buying volume. Now you're getting kind of some quietness. It has pulled back to the 50-day line. again, this thing is buried. It's not for me, but it wouldn't surprise me if it does hold up here and gets a good couple of days going on the upside. Maybe there's something there. Similar story, Five Below. This one's not as bad. Square is, way down from its highs. Five Below is down too, but you can see it's been mostly, it got hit here, but nothing like a tech stock. And it actually has been around, hit a new recovery high this week. Volume a couple weeks ago, although there was a little bit of a reversal. But, maybe this is now trying to repair the damage. And then last but not least, and I mentioned this in Growth Investor couple issues ago, this is Doximity. Great growth story, profitable. It's cloud software, but it's really for doc. It's a niche product. We're seeing some more, as opposed to it went from sort of Salesforce down to like a Coupa, sort of not niche, but more sort of industry specific, or one goal sort of thing. Now down to sort of industry specific. So this serves like physicians and stuff like that. And you can see it came public, had a nice run, but then got killed during the market decline. But again, found some support on volume, and it's trying to do one of these almost like bottoming basis sort of thing. Not for me, but who knows? Maybe this is sort of the beginning of something. And just keep your eye on a bunch of these things. A lot of them will just die and never be heard from again. But every now and again, you get one or two that really pop, and you might have something here, especially when you have a great underlying growth story in a stock that probably was just overhyped when it came public. And obviously the market got in the way too. So maybe these things can stage turnarounds, okay? But overall, so I do think there's some ideas out there. I do think the fact that the market hasn't really gone down net during the last, 2.5 months is a encouraging sign. But, I was talking with Tim, or I texted Tim, and he's like, oh, no, that sounds good. He's like, but I need to see the market actually go up first. And I agree. You need to see, it's good to have an idea. It's good to have your watch list ready. It's good to have some potential bottoming things, some of this, some of that. But, at the end of the day, to make money, the market's going to have to start getting going on the upside. So whether that happens starting next week or, like I said, in 3 months, who knows? Right now, I'd say the trends are mostly down, sideways at best, intermediate term. Most stocks are below longer term moving averages. I do think there's some opportunities out there in commodity land and maybe even a couple in growth land. But for the most part, we just be patient, holding cash and waiting for this to turn around. Okay, that's all the time I have for today. Again, have a great long weekend, and be sure to come by again next week for another Cabot Weekly Review.